Hey guys, welcome back. Thank you so much for continuing to watch my videos. So today again, I'm going to give you a quick market insight from what we're looking at as of the 14th of this month. And I got the resource from the California Association of Realtors. The topics I'll be discussing today will include new listings, mortgage applications, public health numbers in California, mortgage delinquencies, and mortgage rates. Although new purchase mortgage applications continue to moderate from 2021 levels, they remain on par with 2020, which was also a robust year for homebuyer demand. Last week, mortgage applications slipped from 12% from where they were in the beginning of February 2021. However, that puts the purchase index roughly 3% higher than it was in 2020, which is also nearly 20% higher than it was in early February of both 2018 and 2019. Although higher rates are expected to curtail demand slightly in coming months relative to decade highs reached last year, homebuyers are maintaining a level of interest that exceeds pre-crisis standards. The winter of 2021 saw new listings being added to the MLS each week slow to levels not seen in many years. During the week of Christmas and New Year's, it is normal to see less activity on the MLS, but less than 2,000 homes were listed statewide, which is low even by seasonal standards. Relatively slow start to 2022, new listings appear to be getting back on track with noticeable jump over the past 3 weeks. During the first week of February, more than 4,700 homes were listed, and this follows 2 consecutive weeks of at least 4,500 homes coming into the market. That is still down from over 5,700 new listings during the same week of last year, but we are slowly beginning to replenish the number of closed sales coming off of the MLS each week. Despite the expiration of many pandemic-driven protections for homeowners and tenants, the mortgage market continues to improve. Recently released estimates from the Mortgage Bankers Association show that total delinquencies in California continued to fall during the final quarter of 2021 to just 3.2% of all loans. That is down from 3.63% in the third quarter of 2021 and from a peak of 6.83% of all loans during the second quarter of 2020. Perhaps more important than the magnitude of the decline is its consistent improvement. Quarter 4 2021 represents the 6th consecutive quarterly decrease in mortgage delinquencies in California. There was a slight rise in 30 to 60 and 60 to 90 day delinquencies, but serious delinquencies of 90 days or more fell by more than 50 basis points. After peaking at more than 300,000 new cases per day in January, coronavirus cases in California continue to improve. The 7-day trailing average fell below 30,000 new cases per day last week, which is the lowest level in over a month. The number of deaths trail the new cases numbers and remain elevated at above 200 per day, but should begin to follow suit as cases die down. Hospitalizations are down sharply from last month, and California is outperforming most other states in terms of the number of cases per 100,000 residents. Following a strong employment report where the nation added nearly 500,000 jobs in January and elevated levels of inflation, interest rates have surged in the past 2 weeks. The Freddie Mac average 30-year fixed rate mortgage rate remained at 3.69 in their latest report. However, this weekly data does not incorporate the latest daily readings from the originators, which jumped above 4% for the first time in more than 2 years. With January's inflation number rising to a new high and the Fed having already signaled an increase in their target rate in March, as well as an unwinding of their portfolio of mortgage-backed securities, this increase is likely to persist rather than retreat in the coming months that will undoubtedly test the current strength of demand. Thanks so much for watching this week's market update, and I'll see you next time.